Good morning.
How detrimental is the drag from Wall Street?
Well, I think indeed that will have an impact on Europe this morning. You already see the futures going down, and indeed what's bad for the United States is probably double bad for Europe, because we're much closer to the Russian situation than the US is. And then if you look at the markets over the last couple of days and weeks, you have seen the DAX, which is of course, which economy is closely related to the Russian one, already suffering quite a bit. So yeah, indeed we could expect some losses this morning probably.
And the geopolitics, I mentioned it at the top there, clearly seems to be outweighing some positive, generally positive economic data now out of the US.
Yeah, indeed. And what we've been saying to clients, and that may come a little bit as a paradox, because we have quite a bit of geopolitical worries on our mind at the moment. We have Gaza, we have Ukraine, we still have northern Iraq, but still the biggest game in town is the Federal Reserve and what they're going to do with interest rates and when. So paradoxically, all the good figures that we get, yesterday the services in the US, for example, they're not that good for the market, because each time we get a very strong US figure, we see markets reacting negatively to that, and I think that can continue. And I still see geopolitics a little bit as a sideshow, and the biggest game in town is clearly the US interest rates.
How are you playing the Fed ECB divergence?
Well, that's clearly to the dollar. If you see that you have two big central banks doing the opposite, ECB is going to have to ease even more, and the Federal Reserve is looking for tightening, and then that could probably bring euro dollar to 128 for starters, and potentially even lower.